Welcome back to Newsfeed PM. Let's get into some business news now. The dollar has surged the most in 2 years as Republican candidate Donald Trump claimed victory in the U.S. presidential election. U.S. markets have been stronger, with the dollar up more than 2% against the world's major currencies. The U.S. currency has been backed by sentiment that Donald Trump's return to the White House will spur on the U.S. economy to higher growth. Now, meanwhile, emerging markets and currencies like the rand are taking a beating, with Trump expected to raise tariffs and cut taxes. To make sense of it all, we're joined by Bianca Botes, Executive Director at Citadel Global. Bianca, the day has come and gone, and we're starting to see what the picture is likely to look like with the writing on the wall now. Trump's return to the White House, what is that expected to mean for the rand, firstly, and emerging markets?
Good afternoon, Matteo. I think firstly it's important to note that it's not necessarily a surprise to the market that Donald Trump is yet again entering the Oval Office. There hasn't been a clear winner throughout this presidential race. No one has gone and said it's definitely going to be Donald Trump or it's definitely going to be Kamala Harris. And the market's been pretty divided in terms of who might walk away with this win. And I think therefore, when looking at the rand movement, for instance, it hasn't been as exaggerated as one would have maybe expected. But currently, the emerging markets are not faring too well. When we look at the rand, it's down just over 2% at the moment. Mexican peso also under strain, down just over 2.5%. And the Australian dollar is trading weaker by about 1%.
1 to 1.
Now, the rand has also had a good year of trade this year, backed by things like gold surging. But are we looking at the first signs of what life will be like under a Trump presidency, especially for the local economy?
That doesn't work.
Important to take it into context. So currently it's very new. Market is still trying to figure out exactly what that policy will look like moving into the next 4 years. But I also think that markets has a better understanding of Donald Trump now versus 2016, where he came in as a brand new political candidate and no one really had any idea what we could expect from him. I think this time around the market is much more conditioned to actually react to actual policy, actual movements, instead of just trading on the back of noise. Do I think it's going to be positive for emerging markets? Absolutely not. This is definitely not the best outcome for emerging markets. And we will continue to take our cues from global dynamics intertwined with specifically the US policy. And something that we will keep a very close eye on is, for instance, the relationship between China and the US, and what that means for commodities in particular, and how that will infiltrate into not only the South African rand's value, but actually global growth as a whole, with China being the second largest economy in the world. Secondly, how that will infiltrate into inflation and interest rates going forward. Obviously, when we are talking about inflation and interest rates, it's quite a sensitive topic because over the past 2 years, we've really battled to clamp down on inflation, bring it back into target levels, and now we could potentially face policies that could reignite an inflationary cycle.
I wanted to get into that in talking about how a weaker rand movement will affect a lot of consumer-facing prices like fuel prices, products and food prices. Are we looking at a situation where the South African Reserve Bank may have to relook at its interest rate cutting cycle, maybe hold for a bit to see what happens?
I don't think we are necessarily there yet. I mean, when we start looking at the rand, we're not really weaker than where we've traded over the past couple of weeks. We're pretty much in the same range there. And if we just look at some of the volatility we've seen today, we've traded between 1738, which is actually a quite robust level for the rand, and 1773, which is also not as bad as we were just a couple of months ago, trading well above the 18 rand level. What's also counting in our favor at the moment is that we are continuously seeing weak oil prices, which actually reduces the burden of fuel prices, for instance, on the South African consumer. And we have seen a significant reduction in inflation, with our latest inflation reading coming in at 3.8%, which gives the Reserve Bank more than enough room to actually maneuver in terms of interest rates. From a longer-term perspective, we would definitely start looking at how will these policies, if any, impact on inflation, and what does that mean for the rest of the world in terms of inflation and interest rates. But at this point of the battle, we're definitely not going to a point where we are saying that the SARB should hold back on cutting interest rates.
Now, there's been a lot of talk around this election and bond yields on the markets. Can you explain what they are and why they hold so much weight in this particular conversation?
The bond yields to us is an indication of where the market sees long-term interest rates. And they are typically priced. A good measure for us, for instance, is the US 10-year Treasury yield. And that yield tells us where we see long-term rates moving into in the future. Currently, if we just look at the US 10-year Treasury yields, up about 3.8% for the day, which is quite a significant jump in Treasury yields. And it really comes from an anticipated increase in fiscal spending, higher potential deficits, and the potential inflationary pressure that we could see under Trump policies. These Treasury yields obviously deduct quite a bit from the value of those underlying bonds, but it also takes away the opportunity for yield-seeking behavior in other parts of the market, with safe haven investment seekers flocking into the dollar, flocking into US Treasuries at low prices, giving them a nice solid return.
Now, President-elect Donald Trump has floated the idea of a 10% or more tariff on all goods imported into the U.S., a move he says would eliminate the trade deficit that the U.S. has. How does this affect South Africa, and other policies like immigration affect countries like Mexico and the peso?
It will be quite interesting to start off with Mexico, just in terms of when we start looking at that immigration policy, to actually get to the point where we understand that all immigrants or migrants are not necessarily a drag on economic growth. I think Donald Trump would be flawed in his thinking if he thinks that it's an absolute drag, and that you can actually see a little bit of economic growth leakage on the back of that policy as these immigrants actually actively contribute to economic growth in the U.S. When we start looking additionally at the migration issue, there are also certain jobs and certain sectors that we do find that the local demographic doesn't necessarily want to fulfill. And often it is these migrant workers coming into the country, doing the job and fulfilling those functions. And that might have a significant knock-on effects in certain industries, such as construction, for instance. When we start looking from a South African perspective, I think the biggest issue that we are currently facing is AGOA, and what that would mean going forward under a Trump administration, and whether or not that AGOA bill will be renewed, and whether South Africa will be able to continuously benefit from exporting to the US in a fairly free manner without having to face a lot of red tape as well as tariffs. The other country that we are quite concerned about when it comes to tariffs is China. Donald Trump has floated the idea of a 60% tariff on all Chinese imported goods, which in an ideal world, one can understand and say protectionist policies should have a beneficial effect on the U.S. economy. However, we often find that tariffs just imports inflation and doesn't necessarily deter the consumer on the ground from importing the underlying good. At the end of the day, the American consumer just picks up the bill for the tariff. So it will be interesting to see whether that would be a industry-wide rollout, whether it would be a country-wide rollout, and if it is industry-specific, what industries he will be targeting and where he thinks he could rejuvenate U.S.-specific industry.
Bianca, thank you again for your analysis. Bianca Botes, Executive Director at Citadel Global, giving us the first signs there, if you will, of what life under Trump in the U.S. will look like for South Africa.